Good day, traders. Welcome to the analysis for the day. This is the 4th of the 6th, 2019. Just putting up some news while we wait to see if more people join our server, our live broadcast, I should say. Cool. Okay, so for today's topic, we're going to be talking about the daily analysis and what my speculation and prediction is. What my speculation is on the market. Sorry, quickly, I just have to do something quickly. Okay, cool. I'm back. Okay, so let's talk about this following the following market conditions for the day and the possible news events for the coming week. Right, so of course I'm using myfxbook.com and I'm going down to the economic calendar. As I've said in the past, we can also view the news events. Okay, so as you see, we've had some European news, some Australian news for the day, for Tuesday the 4th, 2019, as well as some more European news over here and some medium pound news for the day. For the rest of the day, we have quite a bit of American news coming out and a little bit of New Zealand news. But the New Zealand news is just a medium impact, so it shouldn't be too big of an impact in the market. However, we can't predict the actual the amount of impact that will have. But what we can see is that there is a speech coming out which has quite a bit of high probability news events. I do use to see what the actual speech is about. You know, what is their consent for the dollar and things like that. It's just to give you a good understanding of the background of what's happening. Again, it's not a need or necessity, it's more of a want. We are technical traders at the end of the day, so trading fundamentals isn't my if I can say priority. I'm doing what the charts are saying. However, this can form the chart to turn around. So for example, if you're on a level of support and the market starts moving up and all of a sudden the news comes out that it wants to go, let's say, negative for the dollar, and all of a sudden the market decides to break through that level of support and move down, that is what I'm talking about. Where you're at the level of support, you're planning to take a buy, news comes out to weaken the dollar, for example, or strengthen the dollar, vice versa, doesn't matter, and all of a sudden the market starts trading or breaks through and starts trading bearish. That's just what I mean by the actual sentiment of what the dollar is saying. Remember, speeches happen over a longer period where these statistics that come out happen almost instantly. A short little pushes in a direction. So a higher reading is seen as a positive for the US dollar. We can see here the previous reading was 1.9. They are expecting a lower reading to come out, a negative 0.9. Which means that they are already potentially looking at a weaker dollar, because a lower reading will be seen negative or bearish for the dollar, right? Excuse me. So let's have a look at some charts. Just open up my JP Markets charts going. While that's loading, we can look at what's happening for tomorrow, for Wednesday, the 5th of June 2019. You can see we have some high Australian news coming out at 3:30 in the morning. We also have some American news coming out, some high American news, which has figures again, so it will be a quick little spike. The lower reading is seen as negative or bearish again, speculating a weaker dollar. As well as here some more statistics, they're expecting it to be on par, but they're saying that a result above 50 is positive or bullish for the dollar. So they're actually expecting this bit of news to be a bit more positive for the dollar, right? Again, it can come out negative, it can come out positive. We don't know until it actually happens. That's why at 4 o'clock or at 2:15, it is a good idea just to come and have a look. You know, maybe set an alarm on your phone or a little reminder, just to let you know, just to come and look at what the actual outcome of this was, knowing whether or not you're trading for or against the dollar, whether or not you're trading for or against the Australian dollar, for example. However, I don't expect you to go and look at it at 3:30 in the morning. I mean, that time of the morning we should be sleeping, we shouldn't be trading. So that time of the morning, these types of events, unfortunately, we have to just let them run their course. I mean, we are technical traders. We did have a technical plan involved when entering the trade, so you must stick your technical trade through the end till the end of the trade. Whether it's stop loss or take profit or trading stop, whatever the case may be, you have to set your trade through to the end. Right, let's look at some markets here. Okay. Okay, so let's just have a look at this quickly. This is the dollar index. We'll put it on the daily time frame. If we look at the dollar index daily time frame, we're currently sitting on this level of support, which was previous resistance. Alright, that doesn't mean that is going to hold for certain. There is a high possibility that this could continue to come crashing down, especially since if we look at a weekly time frame, we have this level of A up over here down to a level of B with a pull up to a potential level of C. So I'll put in my A over here and my B at the bottom and my potential level of C. Right, I can put in my horizontal lines, one on A, one on B, and I can find out what level we have over here. If I remember correctly, it was a 61.8 that we found out. Remember, this didn't change much. This is weekly time frames. So what we looked at last week is still happening this week. Right? So 61.8 was it. The 61.8 zone over here. Right? That area was hit and the market started pushing away from that. So on a weekly time frame, we know that we have quite a strong ABCD level to see the dollar weakening. And if we go down into a daily time frame, you can see it. It's tested this once, this area once, pushed away, came back to test this area again, and couldn't break this level before starting to trade bearish now. Right? The market's starting to trade a bit bearish now. If we go down into even a lower time frame, let's take a 4 hour for example. And we can see here that we've actually tested once, twice, thrice, and 4 times. We've tested this area where the market has pushed up to this level, pulled away, pushed up again to try and test it, giving us a lower high, good area to actually enter a sell before moving down, pushing up again, pulling back down, and pushing up for the final 4th time and couldn't break that level before falling. Alright? So the market has tested this once, twice, 3, 4 times over a course of, we grab over here, from the first touch to the last touch, over a course of 25 days. The market couldn't break this level. 25 days and the market couldn't break this level. And it's now starting to push bearish from that level. So that is quite a key level to know that the dollar could potentially look, and if I you know if I look at this area, then I would suspect that the dollar, in my opinion, in my speculation, again, anything can happen. This market could continue to trend further bullish. In my opinion, this market is going to start trending down, as we have what is known as a bullish flagpole, where the market has impulsed down and it's now starting to trend towards the upside like this. It's starting to trend like this. Let me give you a quick example. Right, let's just have a look at this bullish flagpole. Sorry, not bullish, bearish. Bearish flagpole. If you have any questions or anything you would like to ask, you're more than welcome to ask it along in the videos. I don't know if the chat service is available. I think I've just made it available. But if you have any questions, you can send me your questions through the chat on YouTube and I'll be able to answer them. Right, let's have a look at some of these patterns. Come on, there we go. So as you see, the market pushes down and starts to trend a little bit bullish, right? The market pushes down, trends bullish before falling further bearish, right? Again, there's multiple examples. Again, not all of them will be the same, as they're not all done by the same person. Remember, trading is very subjective. You might not be able to see these types of patterns straight away, but it does take time before you can actually start to see them on a regular basis, right? Here is a bullish flagpole where the market's moved up, starts to trade bearish before pushing further up. Right? Here are some entry points for potential bullish and bearish flags. You're more than welcome to Google it. I will save this image just for everyone would like it. Would ever like this image, I've saved it for you. But again, these are things you will have to go and back test. You'll have to go and test these by entering paper trading accounts. Very important. Journalize everything. Look at the way the market moves before you take the trade. Look at the way the market moves after you take the trade. Back test it at least 5 to 10 trades like this. Testing that particular pattern, testing certain things, and once you've, maybe you can add some moving averages or stochastic or whatever the case may be. But once you find your little bit of an edge, journal it down. Believe me, you're gonna start to trade successfully, profitable for a while. Then you're gonna have maybe a week or two where you're not gonna win a single trade. Right? That's when your risk management should be correct, so that you don't have too big of a drawdown. You should also maybe say, I'm only going to take 3 to 5 trades a day, or whatever the case may be, and you take those 3 to 5 trades a day, or per week, or per month, however big you're trading. If you swing trading, then do 3 to 5 trades a month. If you're day trading, do 3 to 5 trades a week or something, and if you're scalping, then 3 to 5 trades a day, right? Remember, the lower you go, for example, scalping is a lot more difficult, a lot more challenging than, for example, a swing trade. Well, this is now my opinion. It's a lot easier to swing trade than it is to day trade, and it's a lot easier to day trade than it is to scalp. However, some people might be able to see the market differently, and they might find that scalping is more advanced. If I can say, it's a lot easier for them to scalp the market than it is to swing or day trade. So, one of the reasons why I struggle to swing trade is I struggle with trades overnight. I can't sleep at night with open trades. My risk is right, my trade is in the profit, I've secured profit, and yet I still can't sleep because I have an open trade. But that's just me. So that's why I'm more day trade, although I'm learning now to kind of handle my emotions and allow those winning trades to run overnight, right? Where I'm able to turn a day trade into a swing trade. But again, it all comes down to journaling, paying attention to what's happening in the market, the types of pairs that you're trading. What will work on one pair might not work on another pair. for example. Right, let's look back at what's happening in the charts. So we see that we potentially can see the market falling, the dollar continuing to fall. Let's see in any of the other charts if we have a very similar opportunity where we could potentially see the market falling. Euro USD, we should potentially see the market going bullish, because when the euro is getting stronger or the dollar is getting weaker in this chart, the market is moving up. When the dollar is strengthening and the euro is weakening, the chart is moving down. Right, so let's go to our daily time frame and we can see we're currently at a level of resistance. Right, we're currently at a level of resistance. But just pay attention to how the market got to that level of resistance. Look at these three candles right here. Look at those three candles. That is quite a lot of momentum pushing towards this level of resistance, which was previous support. That's quite a lot. Right? That's quick movement, fast movement. Right? I mean, there has been other times where the market has moved, for example, 115 pips in one day, which again is a bigger movement than what's happening, or more or less the same size movement, just shorter space of time. But what I want you to focus is on, look at the market moving up to this point here. Look at the market moving up to this point here. There was no momentum, even here, there was no momentum. Here, there is tons of momentum moving up to this level of resistance. Right? We are also anticipating the dollar to weaken, and with dollar weakening, the euro, pound, all the rest of the charts should potentially strengthen to or move away from the dollar. Right? So remember, this is all just my own opinion, my speculation of what I think is going to happen in the market and my trading style and plan. So what I would like to see is, I'm going to go down into a 4 hour or even into an hour. Right? What I would like to see from the market from this point is maybe the market can pull a little bit down. That's no problem. I don't mind that at all. As we do have A to B up over here, we could potentially see it pulling down to its previous resistance, now support, before continuing to move bullish. And if we're going to speculate that this is a level of B on top over here, we'll get rid of these rectangles quickly. And if we're going to speculate that this is a level of B up over here, with a level of A at the bottom, and we draw in our fib from B to A, we actually find that we're on a 38.2 fib over on this level. So that is actually a key level that the market could potentially turn around. Again, could potentially, not guaranteed to turn around. The market could also turn around on a 50 fib or even a 61.8. Remember, the deeper the retracement, the deeper the extension will be. In other words, when we go down to 61.8, we normally extend to a 127. If we don't go that deep and we go down to a 50, we will only extend to a 112. This is just things that I've picked up in the past, right? It's not, again, a guarantee. It could, we could just go down to the 38.2 and extend all the way to a 423.6 fib, right? That's not impossible. Anything is possible in the markets. Right? But again, this is just from what I've seen. I would like to, if it's going to pull down till about here, maybe I'm going to take the trade to the buy. We are very close to a daily resistance, so there won't be a very long traded buy. But if I do take it, I want to see the market move up. And where I am actually planning to take my buy is, remember, we have this level of resistance over here, right? I'm going to trade a breakout strategy where I'm going to wait for it to break this level, right? It must break this level. Go back into my 1 hour. Break this green level, go up to the top, pull down, and retest this level. Previous support, previous resistance, now support. Right? It's a breakout strategy, but I'm waiting for the retest of the breakout before I'm going to trade it further bullish. Right? And over here, only once I've broken, once the market is broken up above till about over here somewhere and pulled back down, I must clearly see it pushing up till there and pulling down, and not just in 1 or 2 candles, maybe 20 candles or so, right? the five finger rule. In other words, when it comes to top, you must have two candles on the side, one candle in the middle, and two candles on the other side to take it as a potential top. Right? That's the five finger rule that we have. I want to at least see the five finger rule on top here, the five finger rule down here, and I will potentially take the trade. Right? That's where I'll enter the trade to see the market moving further bullish. So look at the pound. Take that off quickly. Let's look at the daily chart. Again, I would like to see the pound moving bullish as well, away from the dollar. Pound starting to make its way up from this level of support, which if I take a big firm, so I'm going to take a firm, because remember there is also A to B up to D, A to B down to C up to D happening here the whole way, right? There's an ABCD wave, and I mean there's tons of ABCD waves, there's ABCD waves in everything. So I'm just going to take this ABCD wave over here. Again, subjective. You might not think it's an ABCD wave. I might think it's an ABCD wave. Doesn't mean you're wrong, doesn't mean I'm right. The trading is very, very subjective. At the end of the day, all we are trying to do is give ourselves an edge in the market. We're just trying to give ourselves a bit of an edge that over time, over a course of a month, a week, whatever, however long it takes, however, it depends on your trading system as well. Every 6 months, depends whether you're swing day or scalp trader, you want to be consistently profitable over that period of time, and you're going to have losing trades. So what we're trying to do is just give ourselves an edge that we can actually make enough winning trades and hold them long enough that they bring back all our losers and give us profit. That's the main aim of the game. Right? And this is the edge I've managed to find for myself, so I can take it from the bottom down here, I can take it from up there, it doesn't really matter. I'll take it from this bottom, it's fine. And I'll take it from B down to A. And we found we actually have a 78.6, almost an 88 firm. Very close to this 88 firm. Kind of just touching that 88 firm area or the zone before starting to move further bullish. However, I do see two strong key levels here where the market could potentially turn around. Right? I am anticipating the market to move further bullish, as well as, if we look at it like this, we possibly have a head and shoulders pattern. Inverse head and shoulders pattern, right? We have the left shoulder, the head, and the right shoulder. So here I've got the left shoulder. I've also got the head, and I've got the right shoulder. Right, to potentially see the market move further bullish. If, however, there's still not enough confirmation on this level with those hammers, with the market moving up, what you could do, remember this is a daily time frame, you could go down into an hourly time frame or 4-hour time frame and look for higher lows to be formed. Right? Here we see, I actually had a trade in this morning and I took it out very early. It was a quick scalp trade where I had this low of the market, and for the first time after making lower lows, right, we made a higher low and then a third higher low, and I actually entered the trade over here and I only took out about 20 pips, which was over here. So it was a quick trade in and out, one of my very few scalping trades that I actually do, but 20 pip target, and that was it. Got my 20 pip target and I was out. Right, I entered on a 61.8 fib, which was basically at the bottom of this. So if I look at this as an A up to B, down to a potential level of C, before extending up to D, then I take over here. Remember, we couldn't see that at the time, that's all we could see, right? At the time of busy analyzing this market, this is all we could see. I could just see this little push down. I put my horizontal level there at the bottom. So it was just having this push down, I took my fib from B to A. You see, 61,8. Just as I said, that just spiked down and touched it. That's actually where I took the trade. So my 20 pips was actually out over here or somewhere. I mean, I could have still been sitting in it to a 127, which is 64 pips. But again, that was a scalp trade, something I don't usually do. I wasn't really feeling this market this morning. Yeah, that was a lot of trading psychology that I'm still learning, and I'm still, understanding stuff. I've been trading for 5 years now, and I can tell you now, you still learn new things in this market every single day. Every single day you learn something new, and it will probably go like that for the rest of our trading lives. As traders, we have to keep up with what's going on in the world, and every single day there's something new happening in the world. But I mean, this is just a potential trading opportunity that I took over here, and the market moved to the upside. The reason why I scalped the market was based on a stochastic. I don't normally trade indicators, and this is one of the reasons why. The stochastic this morning, when I traded here, it was still in a overbought condition, which is not something you really want to do. You want to sell in overbought conditions. But I took the buy because of my analysis, my plan. I planned to see the dollar weakening for a while. I had higher lows being formed, possible third higher low, put in my A, B, pull down to C. My trading system, I followed my steps as I was supposed to, and that's what gave me the potential trade, or the trade outcome, the result of the trade. And that will be it for today. Is there any questions regarding the trading system or any other currency pairs that you're currently looking at, or anything at all? Feel free to ask any questions. I'll give it about another 5 minutes. Let's say until say another 2 minutes for any questions, and then we will wrap up for the day. I hope this helps a couple of us with your trading plans and your trading systems. And if you have any trading ideas, you're more than welcome to forward them to me. So send them to me over Telegram, and I can try and assist you with those trading plans and your trading ideas. Maybe show you what I think from my side of the market. However, remember that just because I think the market is going to do something, or I think something differently to you, it doesn't mean that you're wrong. I mean, I've learned that very quickly in this industry. When someone approaches you with something, it can even sound out of this world outrageous, their trading plan and idea, and it can actually work very nicely. I mean, that's their plan. If they've been doing it for a while, they can be positive all the time, then and it works for them, then you can't really put it down. I mean, I've seen so many different trading plans and trading systems and trading styles and trading rules and the way people do their journals, and at the end of the day you have to find out what works for you. We as mentors are just here to guide you and tell you, keep a journal, keep risk to reward management. If you aren't doing those things, then you're only fooling yourself. There's this you have to go out there and actually try it. This is like riding a bicycle. I can show you how to ride the bicycle, but I can't get on the bicycle for you and ride the August tour, or cycle to the shop or something. That's something that you will have to do by getting on the bicycle and falling off and getting on and falling off. The only thing I'm doing here is putting the trading wheels on, showing you potential moves in the market. And again, when this pound, I'm just going back to this pound now, when this pound does eventually push up, turns around, comes back down, P equals F, past resistance, now future support, we have A, B, C, looking to trade towards a D. And we'll continue to trade this bullish for quite some time. If I look at the pound chart, we could trade this bullish for at least the next 38 days, right, which is quite a long time. So I mean, that's could be quite a good potential trading setup that you are more than welcome to. Also, if we look at the stochastic on a daily chart, we're currently oversold, which is showing that we should potentially start trading bullish from here. Cool. Thank you very much, ladies and gentlemen, and I will chat to you again soon. If you have any questions that you maybe couldn't answer in the live or ask in the live stream or the live broadcast, you are more than welcome to message me privately or ask me the questions privately as well. It's no problem at all. Thank you very much. Until we meet again.